Here's the truth, and you might not like it, but Fibonacci retracements to Fibonacci retracement levels are a little bit weak, and you can't always rely on them. I know I explained it in a previous video, but there are other things that will make this absolutely lethal, and in this video, I'm going to explain all three. This is not just another typical Fibonacci retracement tutorial video how-to. This one is going to change your life forever. The four things that I'm going to discuss in this video is using Fibonacci retracements with the RSI, Fibonacci retracements with support and resistance levels, Fibonacci retracements with the previous day's high and low point, and 4, putting them all together. Let's start with the RSI. Most traders know about normal divergences. Price makes a higher high, the RSI makes a lower high. But what really matters here is not normal, standard, regular divergences. What's important here is going to be hidden divergences. That's when price makes a higher low, but the RSI makes a lower low. It signals a monstrous trend continuation if you know how to spot them. Now, stacking this with a Fibonacci retracement, if your pullback lands right in that 0.618 zone and the RSI shows a hidden divergence, that's a golden entry signal. You're not just buying a random retracement, you're buying where both price action and momentum agree. Now, here's what this looks like on a chart. So this is basic, simple, and easy to understand. We're looking for market structure with higher highs and higher lows, and you're only looking at the higher lows. This low is higher than this low. But if we look at the RSI, you can see that we had a low here, and the next dip in the RSI was a lower low. That is a hidden bullish divergence. Now put your Fibonacci retracement overlay on that. It literally like directly to the 0.618 and you got yourself a banger trade. Now let's get into the second part, using Fibonacci with support and resistance. Fibonacci levels on their own are just numbers, but when a Fib retracement lands exactly in a strong zone that's been tested before, that's a confluence. For example, let's say you put a Fib and the 0.5 retracement lines up with a support and resistance zone from the last two swing lows. That zone just went from being a random line to a high probability entry. Always think, does this Fib level mean something on the chart beyond just the number? Stacking confluences is the name of the game here. Now let's see what this looks like on the charts. So we have this previous structure where we had multiple touch points constantly hitting a level of support. Once price broke through with a lot of momentum, price retraced. So you slap your Fibonacci retracement tool on there and you can see we rejected at the 0.618, which was also a previous support and resistance zone where price rejected multiple times. Again, that right there is a lethal weapon. Now, the third part, the previous day's high and or low. These levels act like magnets. Traders love targeting them, institutions love sweeping them, and now picture this. You draw a Fib retracement and the 0.618 line lines up exactly with yesterday's low. That's just not one reason to watch. That's 2 layers of liquidity stacking on top of each other. In practice, these setups often explode because they've got breakout traders, stop hunters, and Fib traders all piling into the same zone. You will have an aggressive movement from this area. But first, let's see what it looks like on the charts. Now, what we want to do is mark up each day separately. So let's zoom in right here. We have the previous day's high and we have the previous day's low point right here. The high, you had the low, a huge momentum swing up, a hard pullback, sweeping liquidity from the previous day's low, rejecting off the Fibonacci gold zone, and the entire subsequent day and a half was bullish. And this is not a tiny move, people. This is on the hourly time frame. So this move was a monster. From the Fib gold zone at 24,000 up to its top, 24,490. Again, so lethal, it should be illegal. Now, imagine all three lining up. A fib retracement to the 0.618 with a hidden RSI divergence. And the level is sitting right at yesterday's high, which also doubles as a resistance zone. That's what the pros wait for. This is where discipline comes in. Most traders take 20 low quality setups a week. Pro traders might just take 2, but those 2 trades stack every possible confluence and gives traders the edge that they're looking for. So you're not just placing a trade, you're betting the house because you know that trade setup is a gold mine. That's the difference between people that gamble and people that trade with conviction, because they know this is their edge. So what should you do with this information now? Here is your action plan. Every single day going forward now, look at these confluences and see when they start stacking up. 2 of them is great. 3 of them is awesome. All 4 at the same time, it's like when all the planets align and then there's a full moon in front of it with a solar eclipse. If you guys want more high value educational videos just like this, check out the trading floor at trdfloor.com. And if you're still struggling getting into a trade because you keep second guessing yourself, go check out our new Earn As You Learn program, where we provide you the trade setups so that you can see what good trades look like and feel like to make those profits. And while you're executing those trades, you can learn about day trading. So now you don't have to wait 6 months until you can start trading. You can do it from day 1 as you're learning. Check out the Earn As You Learn program at trdfloor.com. I hope this video helped you guys out. And if you have questions that you want answered in a video response, put them in the comment section down below. Thanks so much for watching, and we'll see you in the next one.